capacity addition, higher merchant sales, higher EBITDA. That, to my mind, was the story for JSW Energy's Q4 numbers. But I think there's a broader story outside that about what's happening in the power sector, peak power demand and what it does to merchant power sales, and in broadly the EBITDA numbers for a lot of companies which might be in this space. JSW Energy right at the forefront. Let's get in the management to try and talk about the numbers gone by and the outlook ahead. Mr. Sharad Mehendra, he's Joint MD and CEO of JSW Energy, joins us right now on the show. Mr. Mehendra, great having you. We're talking for the first time. Thanks for taking the time out. This is Neeraj here. Good morning. Sum up the quarter and the year for us, because it almost seems that what Q4 has shown is a depiction of what could happen for FY25 and 26 as well, arguably.
Thank you, Neeraj. Yes, I think what you have said exactly, that what Q4 has demonstrated and what last year, we have to understand that how the scenario, first we will talk in terms of demand. If we see that how the demand is shaping up, demand during the full year has shown a growth of 7.5% over a larger base of FY23. And also in Q4 also demand was almost the same at 7.4%. And this continues because April numbers have been out, and we know that in April the demand growth has been close to 11%. So this is the scenario, but this is one side is the demand. But when we see in terms of capacity addition planning, what the government has focused maybe about a year back when government announced of 50 gigawatt of bidding every year to take place, I think government has demonstrated almost the same what they said about a year and a half back. And we have witnessed a significant fresh bidding in Q4, which was of almost 19 gigawatt. Prior to this, we know that we have been away from the bidding in the competitive bid space for last almost more than 2 years. But when we see that now the environment is conducive and the demand requirement is going to be huge, we participated and we were successful in getting almost 18 to 19% of the total bidding which took place. We were successful in winning the bids, which is almost 3.6 gigawatt of bid which we have won in the month of February and March of the previous quarter, which has helped us in creating a healthy order book going forward.
Oh yes, certainly, I'll come to that as well. But just broadly, Mr. Mehendra, the belief seems to be that because demand, as you said, 7.5% for FY24 or above 7% as the demand is, means that during a year wherein we are going to see power deficits, meaningful power deficits, and if the capex drive starts the way we envisage, then that could only get heightened. That question marks, if any, around EBITDA growth for companies like yours or some others should not come into the picture, because if anything, you will shoot on the upside when it comes to those numbers. Would that be a fair assessment?
Yes, exactly. Absolutely right. In fact, the peak demand, when you say the kind of demand growth which is there, if we compare with past few years back when the demand growth was being met by thermal, we have to remember that if there is, in energy terms, there is a demand growth, like about 1625 billion unit was the demand last year. And if we assume a 8% growth on that, and we convert into megawatt capacities, assuming that 5 to 6 gigawatt capacity of thermal will get added, which will take care of this demand, we need at least 40 gigawatt of renewable energy capacity to meet this growing demand of 8% every year. So we see a huge opportunity, and that is what we see that the renewable energy will play a significant role. But we have to remember that it is not only plain renewable energy. If we are replacing thermal, it has to be a solution of RTC power, hybrid power, or FDRE. So those are the areas where renewable energy capacity is going to play a significant role.
Okay. Now, for you, Mr. Mehendra, the two things. I mean, you are meeting or beating the targets set up in a comfortable fashion. I was reading a note wherein they point out that for Maitra as well, while you had pointed to a number of 16.5 annual EBITDA run rate by FY25, you already at 14, and therefore, one, are you under-promising and over-delivering, and are you revising any of these targets? So if you are at 14 billion already for FY24, are you believing that you want to, or do you believe you want to revise your FY25 targets higher, or will you take it as the day comes? Part one of my question is that. Part two is, what about your own capacity additions as they shape up? Are the timelines getting revised over FY25 and 26?
See, regarding Mitra, first question, when you said that, yes, we had earlier announced of reaching the number of 1650 crores EBITDA by FY25, and we are in the right direction, and we have we have done about 1403 crores EBITDA in the previous fiscal. This all has been possible on the various steps in terms of ensuring and improving the efficiency, operational efficiency, and ensuring the increased availability of the machines. So that is why this is looking a very significant increase. But we have been successful in increasing and the availability both of wind and solar. Last year, we have to remember that Q4 has been a low wind season than what is normally anticipated and normally happens, January Q4 of last fiscal. So otherwise, this would have been slightly more, and would have been slightly higher than what we have delivered. But 1650 is a reasonable number that we will be achieving to have the maximum efficiency from the available assets. As yes, going forward, maybe this may not be the best time to tell, but we are exploring of more optimum utilization of the existing capacities which are there in Mitra assets, that if we can increase the capacities by using some of the assets which we are identifying, can be utilized even with higher capacities. So whether it is in terms of transmission capacity or whether it is the substation capacities. So with that, we are looking towards that maybe some optimization going forward may possible. Then we will be in a position to, if in case there is any revision in number is required. And our focus through these increased capacities, if possible, in Mitra assets, is in the CNI space where we are not present in a big way.
Okay, but wouldn't the higher merchant rates in any fashion help you beat these targets? You're saying that you are in the right direction. That is evident, sir. The question is, can you beat the numbers that were believed to be? Wouldn't higher merchant rates help you do that for FY25?
See, the thing is that merchant rates are something which is very, very dynamic. We cannot assume that it will continue. The demand is good. The price in the merchant market. If we see that, we see an upside on that. But if you see the total out of our total capacity is only 15%, which is the open capacity.
True.
Which sell in the market. So as and when the opportunity comes, and with the coal cost, especially from the thermal side, if we talk of, and the coal costs which are at a reasonably low levels, if that persists, definitely the margins are going to be good. But this is something which is very dynamic and very difficult to estimate, and we have to wait and see as the things progress.
Got it. Fair call, and appreciate that. I'm reading a note which says that, not only are you on track to go up to 11.5 gigs by FY27, but they are saying that your 20 gigawatt capacity target by FY30 could be advanced. Now, it's too long term a target, but I'm still trying to understand, are you thinking around those lines of advancing those targets?
Yes, we are definitely thinking. As I told you, that now with a total order book of 13.2 gigawatt, which we have, and the opportunities which exist, we are quite confident that we will be accelerating this growth by few years. Instead of FY30, we'll be reaching earlier at 20 gigawatt number, and we are evaluating, and as and when the right time, we want to deliver our first milestone of 10 gigawatt by FY25, and that is the time that we will be absolutely sure of what is the number for FY30. But the 20 gigawatt, definitely, the growth will be accelerated, and there are opportunities. One is, as we talked about, a lot of demand which is there and the opportunities which are there, and also the inorganic opportunities which exist in the market. So we keep evaluating as and when any opportunity which is favorable, which is giving us the desired returns, we will definitely be going for that. That will also help us in reaching that number earlier.
Well, confident sounding JSW Energy. Let's wait and watch. The stocks come off a little bit. It's an expensive stock, mind you, and it came off a little bit yesterday after reaching highs. And in today's session too, has started off lower. Let's see what happens during the course of the day.